It's your boy, C-Zar with C-Zar Kids Crypto. Uh, today we're going to talk about Dogecoin. We're going to talk about the Doge, about the coin. Let's see, Dogecoin. I'm going to go to TradingView, type in Doge USD. Doge USD, go to, where is it? There it is, Bittrex. I'm using the Bittrex chart, Doge USD. Why? Because it's got the longest historical data, at least that I can find on TradingView. This is going to be an in-depth long-term analysis on Dogecoin. And I say in-depth and long-term, but I'm going to try to make it short. Daddy's got to go to work today. All right, so let's see where to start. There's a couple things that I find that are interesting with this chart. Obviously, in my opinion, just looking at it, regardless of the current trend that we're in, Doge is in a macro uptrend. You can see it. High, higher high, higher high, low, higher low, higher low, higher low. We're getting set up for, right? Even if Doge dropped another 90% from here, even if it was to do that. Oops, that's not the right tool. Let's just go to that. Even if we were to drop Doge down 90%, we would still form another higher low. So, in my opinion, from the looks of this chart, it's easy to assume that we will form a higher low with Doge, inevitably. And if we're in an uptrend, a macro uptrend with high, higher high, higher high, higher low, higher low, higher low, that could then mean, and is suggestive, it's not just possible, but it is suggesting the charts, the statistics, the probabilities. It is suggestive, like a girl at a party giving you the come here finger. She's suggesting that we're going up. We're going to go up to the top floor, and we're going to do it. All right? Sorry, babe. Doing it for the views. All right, so next. Let's see. If we take our fibs, okay, with this macro trend in mind, the higher highs, the higher lows, with the macro trend in mind, we take our first high, and this is Doge's first high, undeniably. You know, we came down low here at 0.00016, went all the way up to 0.002. That's a pretty sizable increase. We're going to call that the high, the first all-time high. Fib from there to our very first low, our all-time low, in fact. Never went lower since then. Fib to fib. If you remember my last video talking about Bitcoin, we broke through the 618 like butter. Here we broke just above it, found it as support twice, actually, which is nice. You like to see that in the fibs. Finding the 618 significant is a telltale sign that that fib retracement and therefore the extension could hold significance and likely will hold significance. So seeing it around these levels of 382, the 618, finding significance there, that's always a good thing. It tells you that the retracement that you've drawn is likely accurate. You're likely looking at a good retracement, okay? Something that other chartists or algorithms are also taking into consideration. So, top to low. We break through the 618, we come up, have this high here, but that's not the all-time high. That's not the high of this cycle, no. Even though we came down, the high is clearly here, clearly. I mean, undeniably. In my opinion, that's undeniable. That is the next high. One high here, second high here, okay? This high broke the 161.8% line. That's the golden extension, the first golden extension. There's the second golden extension. There's the third golden extension. There's there's the fourth, the fifth, the 20th, whatever. They keep going. Most people don't look past the first ones. They don't look into the 2618s or the 3618s. I like to, but they're not always relevant. It all depends. Things change quickly. We're not here to talk about that though. We're here to point out that from here to here, our next all-time high, which by the way, from the low point, from the low, it took 976 days. Okay, so that took well over 2.5 years. Okay, that took well over 2.5 years from the low to reach the next all-time high. That all-time high was at 1618 of an extension. Okay, first all-time high to all-time low, 1618. Okay, and even what's also cool, this second high, it came up past the 2618. That's kind of cool. Finding a little relevance there. Yeah, just a little bit, whatever. But we're not gonna carry on with this one. We're gonna delete this one. We're gonna move on to the next all-time high, to the next low, the next macro low. Here it is, right? Oop, right there. Again, we broke through that 618 like butter. We broke through it like butter. It didn't even provide resistance. If we went on a weekly or a daily scale, sure, maybe we'll find a little bit, but on a monthly scale, nothing. Big old nunion. There's no, that nunion stinks with how insignificant it is. We come all the way up to the 1272, beautiful, classic. We closed at it even, found a little resistance potentially there and support, it looks like. We kept going, found a little resistance potentially at the 1618, but we didn't top off there. No. We topped off well above the 1618, well above it at the 272, the 2272. And then we came back down. We're finding support right now at the 1414. But we're probably going to come lower. We're probably going to come lower is what I'm thinking. We could come down to the 1272 and find support. That actually would make sense right here at 3.8 cents. But we're not talking about that. We're talking about the long-term analysis. In the short term, we're coming down. Cool, whatever. Look at any of my past videos. You'll know that. In the short term, we're coming down. This is about the long term. The long term. If you were to buy now, you're doing good in the long term of things. So remember, this one here came all the way up to the 2272. Well past the 1618. Well past it. Okay, undeniably. The first one from here to here went directly to the 1618. We draw, let's see, boom, directly to it. Where the second one, well past it. Well past it. Now, what I want to get at. Let's see. Let's see here. The next one. From the low here, or no, I'm sorry, from the high here to the low. Now pay attention to how this tool works. You don't need to know anything. You don't need to know the math behind it. Understand the significance behind it, sure, maybe. Like find the significance, look at the charts, like see how it's doing that, I mean, here you can see I drew from the top to the low. This is how fibs work. I just want to go real quick. Even though this move isn't done, even though we will probably come down lower, there can be a fib here, sure, where like the 382 is right here. Some people measure them like this, that's like a preemptive measurement. You line it up with the chart beforehand, cool, the 618 looks good here. That could be a potential low. You go off of what happened previously to find what happens significantly next. It's not always a good method though, because normally what happens before is not as significant as what happens after. So if you're matching it to find significance for the before, it's probably not gonna be right, probably, in my opinion. But some people do that. I've done it before, it does work, whatever. But at this low, what I'm trying to get at, from this high to the current low, we came up to the 236, found it as resistance, now we're going down. It's not a good look. It's not a good look. But even at this low, there is significance in this fib, right? If you notice, the further down I pull it, the extensions here above this one line, it says 1 here, and then in parentheses it's got the price. The extensions here, they come down if I go up, and they go up if I come down. So the lower price goes, the further out those extensions are going to be, right? That kind of makes sense, because if we're measuring this range, if we're going to measure this whole range right here, well, then the extensions of this range are only going to get bigger. They're only going to grow if this range grows, right? That kind of makes sense. Wow. Don't you like that when numbers make sense? I like that when numbers make sense. Okay, so fib from the top to the bottom. Let's just say that the current low, which I don't think, and I don't think anybody believes, this low is going to hold for Doge. I do think we're going lower than 4.9 cents. I do. But let's say it holds, just for shits and giggles, okay? Little shits and giggles. Okay, so 1272. If we break this 618 like butter, which we have in the past 2 cycles for Doge, it's only had 2. It's not a whole lot to go off of, but off of all of its history so far, we can say Doge has broken its macro 618 like butter. Like butter. It broke it like butter. And if we break it like butter, if we slice right through it, I guess you don't break butter. If we break through it like bread, if we slice through it like butter, if we snort through it like cocaine. I don't know. If we go through, I don't know if I'm allowed to say that. If the YouTube algorithm will kick me off. Let's not talk about it. The algorithm that shall not be named. If we break it, the 618 like butter, if we slice through it, we're gonna go to this 1272, the 1618. Very likely. It's very likely that we'll at least hit the 1272 or find it as resistance. And it is still increasingly likely that we will hit the 1618. This zone, I'm gonna use a box because I suck at drawing circles. This zone here is what we're looking for. Okay. Now I'm not saying, even though that this time frame here is August 2024 and it ends in March 2026, I don't think it's going to hit it in that. I mean, it could actually hit it in that box, but I don't know if it's going to. That's not what I'm saying. I'm just trying to give a box so that whenever I take away this fib, you can see where the price is kind of going, right? Anyways, that's all assuming, you know, this is the price range, the projected price range, the projected next all-time high in Doge's cycle, right? The next cycle, the next bull cycle, which is kind of easy to map out. We'll get into that in another video or maybe later in this video. But right now we're talking about Dogecoin. That's the minimum. This is the minimum to expect. And I want to put some numbers in perspective for you here. Okay, I'm going to draw a line right here at $3.20 and just talk about the relativity. Right about there, that yellow line. That would put Doge at a $500 billion market cap. $500 billion, okay? That's a lot of money. That's a very high market cap. There's not a lot of cryptos. I think there's been 2 cryptos that have actually broken 100 billion. Maybe 5, maybe 2 or 3 actually. Let alone several hundred billions, okay? Has it happened? Yes. Will it happen again? Yes. Could Doge be one of those coins that it happens to? Potentially. And looking at the chart, looking at this macro trend, I think it's relatively easy to assume, especially when we take other things into consideration. Other things like, you look at the Heikinashi. I'm gonna take this away real quick. We've had the most red Heikinashi candles in a row ever in Doge's history. Okay? Now imagine we went straight up. Imagine we went straight up like that, right? We didn't just go up and then meander and then go up, right? We had a nice kind of, it went down. Don't get me wrong, that's a big downtrend here, but it kind of moved sideways for a lot of the time. Here, we just went straight up and then boom, straight down. And then a little sideways, right? A little sideways afterwards. And then a little up and sideways. Here we just went straight up. So now we're coming straight down. But if we're having a straight down, we're not moving sideways like this, I think it's easy to assume that we will have a very significant bounce whenever we get down there. A substantial up move means you're going to have a substantial down move. A substantial down move means you're going to have a substantial up move, you know, vice versa. I don't know if I lost anyone there, but let's get back to the main point of conversation. This is the most red candles we've ever had in a row. Things don't move in straight lines, whether it's up or down. And the more straight that line is in whatever direction means that you're treated like a coil. You're coiling up for the recourse, the next move. And the next move, if this move's a down move, the next move is going to be probably an up move or a sideways move, whatever. But this to me is like a giant spring. I think not just to me, but just like to a lot of people. You know, we come, ooh, right, I have this on there. I forgot. Let's see, delete that. We come down, right, and then boom. It's like a spring. It's like a very big spring. It might not happen exactly like that. We might, you know, this right here, mind you, this little like gap is like several months of sideways movement that can happen, and that can happen. But we're not here to talk about hypotheticals. Let's move on. Anywho, I'm just trying to say that this downtrend here, to me, bodes well for the next market cycle because it's a very hefty downtrend. But hefty is the right word to use, but also kind of contained. You can see it's not like we came all the way down here and then like went back up and then like kind of held some structure and then broke out that structure. You know, no, it's not an ugly thing. It's a very, very pretty thing, actually. This oh, wrong line. This downtrend here from top to bottom. This video is going to be a little longer than some of them just because I like Doge and I feel like we got a lot to go over. But it's kind of, you know, it's kind of in this like descending channel. I mean, You can draw a wedge if you want, but I don't like wedges so much. I like channels. That to me, that looks beautiful. It's a well-contained, well-structured downtrend, which is great. You want to see that. It's not just sporadic randomness. You know, there's still control, whether it's bullish or bearish. There's people trading this. I want to put the fibs back on. I feel like I got a little off track there, guys. I'm sorry. From the top to bottom, current projections are anywhere from $1.50 to just under $4. Okay. And in fact, if we were to base it off of the last 2 cycles, which isn't a lot, that's just 2 iterations. That's not a whole lot to base off of. But if we were to base it off of that, then it's not only likely that we break this level, or that we hit this level of $3.94. It's not just likely, but it's likely that we break above it. Above it. The last time we went to the 2272. That is all the way up at $23. I don't think that's going to happen. I think that's you know, head in the clouds, pie in the sky. That's probably not going to happen. Doge would have to have a market cap of several $1 trillion. That can happen if the dollar goes to shit, but the dollar's not going to shit. Not while they're raising rates and controlling inflation. The dollar's only going to get stronger, especially with all the world currencies going through hyperinflation right now. The dollar's probably only going to get stronger. So I very much doubt we see a price like the last one, where we went from the top to the bottom and we went all the way up to the 2272. I doubt we see that kind of move again. But will we see a move that breaks the 1618 like we have the last 2 times? I think that's easy to assume. I think that's fathomable. That puts us over, just over, remember, because this line here, this yellow line at $3.20 ish, that's about $500 billion. Okay, that is a lot. It's a very big number, but it's an achievable number. It is something we've seen in crypto before. It's something we will see again. It's just a matter of what coin is going to do it. You know, what coin's going to do it. It's probably not going to be the coins that are worth 20 million market cap or 100 million market cap. It's probably going to be the coins that have a several billion-dollar market cap right now at the lows. Okay, because that would just be an insane run-up to go from millions of dollars to hundreds of billions of dollars in one cycle. That would be an insane run-up. It can happen, but it's very unlikely. I just wanted to put this yellow line here for reference of a $500 billion market cap. $500 billion. It's a lot of money. It's a lot of money. I can't stress it. I cannot stress it enough. It is a lot of money. It's a lot of fucking money, man. But it is achievable. It's possible. It's dare I say, even likely, based off of based off of price action from the past. It's not just assumable, but like likely. Like, in my opinion, we can use the word likely to achieve this 1618, the $3.94 mark. I don't know if we'll actually hit it. This might be the first cycle. This could be the first cycle that we don't break the 1618 or hit the 1618. It's going to happen eventually. We can't just keep going up like that forever, you know. But it could also, you know, this could be the last cycle that we do break it, you know. It could be the first cycle that we don't break it. It could be the last time that we do break it. But either way, I think this 1618 level is a level we need to pay attention to and identify anywhere between this $3.20 to that level as a potential top for the next cycle. Another thing, maybe I don't have you sold on the $3 price range. Maybe that sounds ludicrous. Doge to $1 sounds crazy to you, okay? But let me make it sound a little less crazy, okay? The 1272 right now is at $1.54. And we've at least broken the 1618 every single time, let alone the 1272. It hasn't even been a thing. It hasn't even been really a blip in the radar. You know, we found a little resistance last cycle, but we broke above it, no problem. The 1272 is at $1.54. Now that's less than half of the 1618. That's less than half of it, right? If you sold there, you're missing out on another 50% potential, or another 100% plus potential in gains, sure. But even selling there from the current price, let's just say you bought at the current price, you didn't even buy at the lows, current price, that puts you up 2,400%. 2,400%. Even if it doesn't go there and it only goes to the 618, that puts you up 300%. you're doing really good with this asset if you do that. You know what I mean? No one's going to be upset with that. And I do think we're in a relatively safe time to buy, but I do think we're going to go lower. And if you remember earlier, I was saying that the lower this goes, the higher that those projected targets go. And if we were to go, I think price is going to go around 3 cents personally. I'm not going to get into it now, but if we look here, there's a major support on that monthly. We go to the weekly just to get like a better look. You can see, boom, right there. If we go to the daily, it's even cooler actually on the daily. Sorry here, let's see. So on the daily, the price actually goes even lower. Price finds support right here at 2.2 cents. And I do think we're going to see a low come in somewhere. Now that I've drawn those lines, I'm going to go back out to the weekly. I do think that we're going to see a low come in somewhere between those two bottom yellow lines. That's where I'm assuming the next low to come in. I haven't drawn a fib on this yet. Let's just see from low to top here. I'll get rid of this fib so it's less confusing for the layman's out there. No offense. You know, an extension down to the 1618. It's a little bit above this yellow line. Okay, we could see a bounce off of 3.4 cents. Sure, we could see a bounce off of that. That would make sense. We could see a bounce off of 4 cents even. I mean, look at that. This low right here, this little, what sent us all the way up to all-time highs, this low, this bounce, that is literally right there. I know it's in line with the 1414 here, but that's the red line. The way that this is, it's kind of weird, but the 1272, this yellow line is directly on that at 4.1 cents. Could Doge bounce there? I think so. I think that's likely. I think that's a completely probable thing to do. The reason why I don't think that that's going to be the low, why I do think we're going to go lower, is something very simple. It's a time-old thing to do. Keep in mind for Bitcoin, for crypto, keep in mind for crypto, Bitcoin is king and it matters. Okay, it matters what Bitcoin's doing. If Doge was to go all the way down to this low here, that's a 31.8% drop. Okay, 31.8%. I'm just going to go to Bitcoin real quick, just real quick, just to put it in perspective. If you watched my last video, you'll know that we're projecting a target of anywhere from 14 to 16,000. At current prices, a $16,000 price would drop us about 19%. About 19. If we went down to 14,000, that drops us about 30. Okay? Remember that. 19 to 30%. Okay? Let's go back to Doge. A 31.8% drop at the lowest, right? That's what we're thinking. So Bitcoin's 19% is Doge's 31.8%. Okay? Normally when Bitcoin drops 10%, the other cryptos, Ethereum excluded from that, and some cryptos will be excluded from that, but Ethereum's normally the one that's excluded. But most cryptos, even Doge, if Bitcoin drops 10%, other cryptos drop 20% or more, right? They drop a lot more. They don't get hit kind of harder. They get hit a lot harder. So if Bitcoin's going to drop 19% as the first one, remember, then I think it's pretty easy to assume that we could drop to 36, 38%, which is just below 4 cents, okay? We could do that at a minimum, because if Bitcoin's dropping at a minimum 19%, that would mean that this, at a minimum, we could assume is somewhere around 4 cents, somewhere just below 4 cents. If we break this line here as support, then I think, again, going back to the daily, then I think what we're going to do, because that's this line here, that just above $4 here. If Bitcoin drops 19%, Doge drops just under 40%, right? Something like that. This is all assumptions here, okay? This is all just kind of like how I've seen things play out. So I'm spinning a yarn for you. I'm spinning that yarn. We're creating a story, and if this story goes according to plan, this is what it could look like, okay? It's not that I'm saying this is going to happen. It has to happen like this. There's no other option. No, I could be wrong. We could go to $100 tomorrow. Who fucking knows? But if we break this line here, in my opinion, that's suggestive that we are going to test a level of significance in this range, which the only levels that I can find that are significant in this range are the lows that it bounced off of. Really easy, right? That's at like 2.2 cents. Again, going back over these lines. and then the areas that it kind of like closed at and held as support or resistance there, you know, like kind of there, which is like a little bit above 3 cents or a little bit below 4 cents, which is kind of what we were talking about. Okay. Going back, remember I said Bitcoin could drop at a minimum of 19% to 30%, right? That's what it was, 30%. Fits. I don't remember. I don't actually remember. Let's go back. BTC USD. If it was to drop to 14,000 from here, that's the important part. It's from here. About 30%. Yeah. Okay. So about 30%. So if Bitcoin was to drop 30%, then Doge could definitely drop 50%, right? Like that's not even, it's not 60%. If it was to drop, Bitcoin was to drop 30%, Doge could definitely drop 60%, let alone 50%. But let's say, let's just put it in perspective for nice round numbers. Let's go to 50-ish%. That puts us right around 3 cents. Right around 3 cents. Like right there. Literally right there. What else is right around 3 cents? Take this low to the top here. Nothing. There's nothing else right around 3 cents. So that was a bad fib to draw. But that doesn't mean that it can't achieve those levels. Sometimes it doesn't line up with those fib prices, you know. Let's see. There's not really anything. I guess I could measure this one here. This fib from down up here. Yeah, there's not really any fibs to go off of. So when I'm confronted with a situation like this where I can't find an extension that matches with the price that I'm looking for, you do one of two things. One, you base it off of previous price action, right? You find areas of support over here to make significant. Okay, we've got that. You know, we kind of got that around 3 cents. It's definitely above those levels. It's not around the fibs, but that's okay. Or two, instead of looking for fib extensions, look for fib retracements. And, you know, here from bottom to top now, this is a fib retracement all in here, and then that's the extensions. If it doesn't match with the fib extension, match it with the fib retracements. Well, we're not going to retrace from here. If we want it to match with a fib retracement, we're going to match it from its last cycle. We're going to go to its last cycle lows, all the way to this cycle's current highs, and then boom, right around 3 cents. Right around 3 cents. We got the 50 level. I made a video about Ethereum. It was my second video ever, so, showing how we just bounced off the 50 level on a significant time frame, but to the downside, we found it as resistance. I made the video saying that bouncing off the 50 level is not something that's common. It's not uncommon. It's not that you never see it. It's so rare. Oh my God, no. It's just not common. Normally, you come at least to the 618 or you find support off the 382. You know, you don't normally bounce off the 50. And that's because technically the 50 is not a Fibonacci ratio. But 50%, you'll find that the halfway point in a lot of different charts, a lot of different metrics, a lot of different tools, the 50% point is a good area to find support or resistance. It can happen. It can definitely happen, you know. Like here, just for example, real quick. We'll come back to this in a second. This is the biggest green candle, the last biggest green candle. We got a big one right here too, right? That's a pretty big one. That big one, that's the last big one. That's the last significant on a weekly time frame, last significant bullish move that we had, kind of, right? If I put a line like right there in the middle of it, we found support off that line once, twice, 3 times. That support sent us to all-time highs. This support sent us back to 30 cents. We found support on it here, and then we broke it, found resistance on it, and we came down. And you could have drawn this line simply by using this big candle, the one that's so obvious. It's not this little one. It's not the little one before it. It's not this big one down here. No. It's the most relevant one. You put a line right in the middle of it. It's that simple. 50%. Similar to here, 50% of this range, right? We might find significance on it. Just for whatever reason, the 50% areas seem to have significance. It's just a thing. It's not a common thing on the fib. You know, it can be common on the candle bars, but it's not that common on the fibs. But when it does happen, it's significant. It is very significant. That's what I'm trying to allude to. We just had a bounce. I'll show you. Well, even, you know, instead of talking about it, let's just go back to Ethereum real quick. from the all-time high, the absolute all-time high Ethereum had, to its current low. Ethereum went up to the 50 and it rejected it. It bounced right off it. And you can see, not a common thing that happens, but when it does happen, significant moves ensue. We had a bearish engulfing candle. A bearish engulfing candle that was how much percentages in the red? 16%. That's a significant move in 1 week. The next week was 11.8% down. You know, we're in this week right now, 2 days. We could be getting set up for, it looks like, in my opinion, finding resistance at the open and the close from the prior 2 weeks and coming down. If we come down, that's a wick. That doesn't look good, you know. We found resistance there. We came back up, wicked off the 382. It doesn't look good. We're not here to talk about Ethereum, though. I'm just kind of showing that the actually, I don't need to do that. That this 50 can be significant, and if it is, we get significant moves. Okay, back to Doge. If this 50 on the other end now, coming to find it as support, if this holds as support, we will see a significant move to the upside. We will. I can't say we will. Nothing has to happen, but the odds are in our favor that we will see a significant move to the upside. Not a move like this, not a move where we just kind of come up and then down, you know. We're not, or a move like this where we come up and then down. No. Or a little one like this and then no, none of that. None of that. We're not going to do any of that. If we hold the 50, we're going to see a move that is significant. We're going to see a move that's very significant. And it's probably not going to just look like that, right? It'll probably, what would happen, just in theory here, if you're following the fibs, you'll probably come up, find resistance here or support. You could break it and then come down and find support. And then boom, come up to this. You could come back down to the 382. You could break above it and do the same thing that you did with the 382 and find support, and then boom, off to the races. You know, it doesn't have to be like any of those. It can be completely different than any of those. But you can find a significant move while still finding pit stops along the way, is what I'm trying to say. It doesn't have to just move in a straight line like that. It could, but I doubt it. What I don't doubt is that we could bounce off of this level, which out of all the confusing fibs that I've given you today, out of all of them, that is the most significant one to me. Why? Because it's from the last cycle's lows to the current cycle's highs. That's a significant reference in my opinion. I use that word significant a lot because, I don't know, that's just my word of choice, but it is significant. It's very significant. So if we find significance off of this significant range on a number that's not commonly bounced off of, but when it is respected, we find big moves, I think it's very suggestive. And not only that, to put the cherry on top, there's a lot of stuff that we just went over that lines up with this near 3-cent zone. Near 3 cents. And I know the Ethereum one was beautiful. It came right to it and bounced right off it. I know that was beautiful. It doesn't have to do that. It could break the 50. It could wick through it and then close back above it and then bounce. That's okay. That's totally okay. It could even close below the 50, pull what they call a fake out, and then the next one come back up above the 50. You know, that can happen too. It doesn't, that 50 is not the end all be all. It can still go lower than 3.1 cents. It could also not even reach that. It could find a little support, what they call front running, right? There's so much buying pressure down here that it can't even reach its area of support, that we just go off to the races. And that could happen right here off of this little, you know, we got support over here. It could totally happen. It could totally happen. I don't think it will. I do think we will break 3 cents, or if we don't break 3 cents, we will at least get to it. But bouncing off this range, closing statement, bouncing off this range would be very significant for Doge. And I do believe we're going to reach that price. And when we reach that price, the next measurement would be from here, from the top, all the way to, let's just say, because remember, the lower it goes, the higher the projections go. So let's be conservative. Let's say it goes to 3 point. Let's even put it at that line right there, at 4.1 cents. The 1272 is now at $1.61. The 1618 is above $4 by a large degree. Doge has a bright future, y'all. It's got a bright future. It's got a very bright future. There's one more thing I do want to talk about. I know I said closing statement, but there's one more thing I want to talk about, and it's kind of foo-foo. If all this stuff wasn't foo-foo nonsense enough for you, this one's really foo-foo. But it's an anomaly. It's a statistical anomaly. And I'm going to throw a shout out to Mitch Ray. Mitch Ray, TA with Mitch Ray. He probably doesn't even know who I am. That's okay. I learned this rule from him. And I, so far, have not found it to be incorrect. I've never seen an instance where it has not been correct. I've even gone through charts in the past, looked at their stuff from like decades ago to see how it reacted, and it has always happened that I've been able to see. The way he defined it was that it's a 99% of the time likely. Nothing's 100% of the time. In my experience, it has been 100% of the time, but I do believe that it's a 99%. It's just an anomaly. This anomaly, what I'm trying to talk about, I don't know what it's called. He didn't know what it's called, but he explained it. I call it the 9s and 10s rule, the 9-2-10 rule. And it's simply this: when something reaches it's a self-fulfilling prophecy. It's a psychological self-fulfilling prophecy. When something, you have a stock, a crypto, whatever, it's worth a cent, and then it goes all the way up to 9 cents. Even if it goes to 9.8 cents, and then it gets rejected and comes all the way back down to 1 cent, you have a statistical probability unlike anything else, and it's an anomaly. I mean, it's an anomaly because this happens 99% of the time, according to Mitch Ray, and 100% of the time, according to me, in my experience. I believe that it doesn't happen 100% of the time, but I've just never seen it not happen. If you go from a 9 and you come all the way back down, I don't care if you go back to a 0 point whatever, or a 1, or a 2, or a 5, or whatever, you go to a 9, you find resistance, you come back down, you are statistically likely to break that 9, and you're statistically likely, not just likely, but almost guaranteed to break the 100 or the 10. It's a self-fulfilling psychological prophecy. If you come back up to that all-time high back at 9, you're not going to just dip below it. You're very likely going to, if you find resistance at that level at all, you're going to go just above it to the 10, break that, and then dump. And then sure, if it's a shit coin or a shit stock, whatever, then it goes to 0. But if it's hit that 9 and it never hit that 10, it has a statistical anomaly behind it that literally suggests that you will break that 10 inevitably. Why am I bringing this up? If we go to Doge, we go to market cap, Doge's market cap, the all-time high for Doge is at $98 billion. 98. The current low is at 6.5 billion. Okay. It came down however much, whatever much. It came down a lot. It can go lower. This line can drop all the way to who cares. It can go so much lower if it wants to. Doesn't matter, because right now we have a statistical probability, an anomaly. I've been using that word, so let's keep using that word. It is literally an anomaly. And that I can personally verify with like multiple things. We're not going to do that. I don't want to make this video too long, but if you don't trust me, go verify it for yourself. Go look at any stocks, any cryptos, any whatever that were below a $10 limit, a $1 limit, a 10-cent limit, 100, whatever, find your 10s and 9s, see how it reacts with that. It might on the first pass break the 10. Cool. Well, then this rule is ignored. But if it breaks that 9 and it doesn't break the 10, and then it finds resistance and it goes back low, tell me it doesn't come back up and break that 10. Tell me it doesn't either smash through that 10 or barely break above the 9, break that 10, and then find resistance. It at least breaks the 10. And when I say it at least breaks it, I mean, like, I don't care if it goes to $100.01 or $10.01 or 10.1 cents. I don't care if it barely goes above it. It will barely go above it. It won't hit it. It will break it. It will pierce it. We went to $98 billion and we came down. We did not break $100 billion. We're likely, I know this all sounds foo-foo, guys, but I'm just telling you, from what I've seen and what I believe, we have a statistical probability, likelihood, and I know nobody likes to use this word. This is not financial advice. This is my opinion. But my opinion is we have a fucking guarantee that Doge will reach a $100 billion market cap. A $100 billion market cap, just so you know, is right there. It's basically right on top. But again, Doge's price topped off at 73.9 cents. So what we have at the very minimum, out of all this bullishness, right, I'm projecting that we come up here to $1.60 to $1.40 or $4, somewhere. I really think we're probably going to more likely go to like $3 to $4, somewhere in that range. We could go above $4. I very much doubt that we go above $5. I don't think that that's going to happen for Doge. Okay, $6, somewhere around there. But those are pie in the sky high numbers, anyways. I think $3 is a high enough number as it is. What I'm trying to say is we're looking at this zone, or I'm looking at this zone. That's the zone that I am considering us to go for the next cycle's highs. But at a very minimum, at a very, very, very minimum, if we came down to, let's just say 4 cents again, right? Let's just say we only went to 4 cents at the lowest. If we were to come back to this all-time high, that's a 1,700% gain in price. 1,700% gain. That's great. And you know what's great about that too? We have a fucking anomaly. We got a statistical anomaly that 99% of the time, if you hit the 9s and you come back down, that you will break that 10. Well, we hit the 9s. We hit the $98 billion market cap level and we came back down. We are statistically guaranteed to go back and break that level at a very minimum. At a very minimum right now, I bet you can guarantee, even if you bought right now, you can expect over 10x price return. This is not financial advice, but I do believe this. I do believe this a lot. But it's not financial advice. This is definitely my opinion. I can be wrong. I've been wrong before. I will be wrong again. Could I be wrong about this time? Could this be the first time that I've ever seen the statistical anomaly not play out? Yes, it could be. It totally could be. And I'm not ignorant to that. Do I think it's going to be? I don't think so. I don't think in this macro uptrend that we're seeing with higher highs, higher lows, every single time that we've had a macro high to a low, we've broken the 1618. I don't think that we're not going to see it. I think we're 100% going to break that high. But if you want a little foo-foo fairy dust sprinkled on top of that whole cake that we made before, that 9s and 10s rule kind of helps out. It helps. Oh, getting a call from my boss. All right, y'all. That's a good place to end it. I hope everyone has a good day. Buy some Dogecoin. It's not financial advice. It's just a suggestion.